Good morning, good afternoon, and good evening. I am Emma Joyce, Head of Community at Global Digital Finance, and it's my pleasure to welcome you to this Global Leaders Town Hall in partnership with the Global Blockchain Business Council, with special guest Heath Tarbert, Chairman and Chief Executive of the Commodity Futures Trading Commission. Jeff Bandman, GDF Board Member, is hosting today's Town Hall. Jeff is widely recognized as a thought leader, speaker, and educator on blockchain and crypto asset law, regulation, and policy. He is co-founder and board member of Global Digital Finance and leads our regulatory engagement globally. Jeff was formerly a senior official at the US Commodity Futures Trading Commission, where he was responsible for design and launch of LabCFTC, the CFTC's innovation hub and the first established by a US market regulator. Dr. Heath P. Tarbert is Chairman and Chief Executive of the Commodity Futures Trading Commission. He was nominated for a term expiring on April 13, 2024, and took office on July 15, 2019. The mission of the CFTC is to promote the integrity, resilience, and vibrancy of the US derivatives market through sound regulation. The agency's approximately 700 personnel based in Chicago, Kansas City, New York, and Washington, D.C. also work to ensure US commodities and derivatives markets are free of fraud and manipulation. Chairman Tarbert also serves as a voting member of the Financial Stability Oversight Council, as a vice chair of the International Organization of Securities Commissions Board, and as a member of the President's Working Group on Financial Markets. Chairman Tarbert has extensive experience in financial services law and has served in senior leadership roles in the public and private sector. Most recently, he served as Assistant Secretary for International Markets and subsequently as Acting Undersecretary for International Affairs at the US Department of the Treasury. In these roles, Chairman Tarbert served as the G7, G20 Deputy Finance Minister, a member of the Financial Stability Board, and the co-chair of both the US-EU Financial Regulatory Forum and the US-UK Financial Regulatory Working Group. Prior to his service at the Treasury Department, Chairman Tarbert was head of the bank's regulatory practice of Allen & Overy, a leading global law firm. I will now hand over to Jeff and Chairman Tarbert. Thank you.
Great. Thanks a lot for that introduction, Emma. And first of all, Chairman Tarbert, it's a great honor and pleasure to have us with you today. And thank you so much for joining us.
Well, thank you so much, Jeff. It's great to be here, and particularly with a distinguished alum of the CFTC like yourself.
Great. No, I wear that alumni affiliation with great joy and honor. Early in your tenure, we can go back a year or so. When you started as chairman, you went on what some might call a charm offensive across various media, TV, print, and others, describing the CFTC as the most important regulator most people have never heard of. Why is it so hard to communicate what the CFTC does, and why is it so important? And do you think you've gotten the word out at this point?
Well, thank you so much, Jeff. I think that's the first time anyone's called it a charm offensive, but it certainly was an outreach. I thought it was important because, and I'll just give you a little story. I, of course, came from the Department of Treasury, as was mentioned, so the Treasury. And even my mother knows what the Treasury is. And I remember talking to a parish priest and him saying, well, what are you doing next? And I said, well, I'm currently at the Treasury. And he said, that's fine. And everyone knows the Treasury from dollar bills and whatnot. But I said, I'm going to lead the Commodity Futures Trading Commission. And he said, could you explain that in English? And it was very clear that I think there's this disconnect between the name recognition of our agency and also particularly what it does and the important critical role that it plays, not only in the US derivatives markets, but more globally. And so as you noted, I like to say it's the most important financial regulator most people have never heard of. I think that's because when we talk about derivatives, when we talk about swaps, futures, and options, they're very sort of technical financial instruments. But the key is that they have such a tremendous impact on broad swaths of the US economy and on the global economy. They effectively help determine the price of everything Americans pay for the gas or the petrol that you put in your car, to the interest that you pay on your home mortgage, to the price of cereal in the grocery store. And they also affect prices around the world. So I think explaining that unique mission that the CFTC plays, and by virtue of that, the derivatives markets and their role, not just in the financial sector, but in the real economy, was something that I think hasn't always been emphasized, or certainly hasn't always been known. And so we really wanted to push that as part of our our onboarding agenda.
Sure. And do you feel like you've been able to get that message out in your tenure?
I think it's getting out, but I think the more that we do in that area, the more important it is. The interesting thing, of course, going to global digital finance is that I feel like the younger than the next generation, Generation X and Generation Y and so on and so forth, they actually have a much more better working familiarity with the CFTC because of new commodities like Bitcoin and Ether in our jurisdiction. So, but I do think it's important to explain to people, this is what the derivatives markets play, these are what commodities are, and these are how it affects everyday life, even if you're not actually trading in our markets.
Yeah, and in terms of your last statement, I couldn't agree with you more. I mean, certainly in my various roles at the CFTC, it was often very challenging to explain what's a derivative, what's a clearinghouse. But then as kind of virtual currencies and digital assets became more important, it was a little easier to describe. And also, as I became more involved in the CFTC's efforts around innovation. And speaking about innovation, you've written a lot about the importance of the CFTC as being a principles-based regulator. What is a principles-based regulator, and why is that important in terms of innovation?
Sure. So it's a great question. And I think the CFTC, when you look at financial regulators, certainly in the United States, is unique in the fact that it blends both principles-based regulation and a tradition of that with rules-based, more sort of customary rules-based regulation. And so many regulators in the US are sort of far more focused on the details and very specific delineated rules. The CFTC has sort of a blending of both. And particularly the emphasis on principles, I think, makes the CFTC unique, certainly in the United States. And so a principles-based regulator is a regulator that basically says, rather than focus on specific, very detailed, rules of conduct, we will provide to the marketplace and to market participants sort of much higher level principles. And as a result, market participants have a degree of flexibility as to how they can apply those principles and fulfill them. It also provides flexibility to the regulator in adapting those principles over time. One of the problems we see, particularly in areas where there's immense amount of innovation and change, is that detailed prescriptive rules become obsolete nearly the moment they're introduced. But broad-based principles allow change and evolution over time, and they also allow the CFTC to make sure people are not being creative with compliance and taking advantage of loopholes. When there's a general principle, you can look at the market participant and say, it's not just the letter of the law, so to speak, but it's the principle behind it. So that's a major advantage of principles-based regulation. Now, that said, there are other areas where I've articulated where actually a rules-based regulation system makes sense. And so it's not an ideological issue. It's a question of what are the factors that make a principles-based approach far more sounder in terms of regulation, and what are the areas that make rules-based sounder, and how do you distinguish between the two and have that perfect blend so the market can continue to innovate and grow, it can have integrity, it can have resiliency, but it can also have vibrancy. So that is the big one of the big intellectual projects that we've tried to infuse throughout the agency on all matter of our policies.
That's fascinating, and kind of the balancing of mission, when to be principles based, when to be rules based, but to create an opportunity that benefits both the agency and the regulator as well as the innovators. I was of course delighted to see that you elevated LabCFTC to an office reporting directly to you in the context of all this innovation. What was the thought process behind that? What were you hoping to accomplish, and where do you see the future of LabCFTC going?
Yeah, so first of all, let me commend you for your leadership prior to me joining in helping to create LabCFTC. Really important, as you mentioned, we were the first US regulator to do so, to have an innovation arm specifically for that purpose. So my question when I came in the door was, how do I take it to the next level? And in some cases, literally on the organizational chart. But really the thinking behind it was this. Okay, LabCFTC was created, it was born, it was within our Office of General Counsel, which made sense, and there it was able to grow. But what we found was that at the end of the day, by not having it at the same level as other divisions and offices, LabCFTC wasn't necessarily part of those discussions when it came time for actually policymaking. So by elevating it internally, it made the difference of having LabCFTC literally have an independent seat at the table when we were discussing policy. So when the Division of Clearing and Risk, when the Division of Market Oversight, when we're talking about rules and regulations, LabCFTC is there to inform and to participate in the policy discussion. Secondly, it obviously elevates the status. And so both outside and inside the agency, people understand that LabCFTC really is of immense importance, not just to people in the bowels of the organization, but to the very top. So that was part of the thinking in elevating LabCFTC. And so far, I think the results speak for themselves.
That's fantastic. And yeah, I think, many, a number of other organizations or regulators around the world that also now have, innovation arms. I think it's, a number of them, they do report directly to the chief executive or, leader of the organization. So I think that really does help. Obviously I'm a little partial, but I was happy to see it. And in this extraordinary year in so many ways, what do you see as some of the agency's successes around the general area of fintech and innovation over the past year?
Yeah, so I think when you look at the past year, and we'll talk about COVID-19 separately, but I think overall, the fact that we have seen our markets digitize over the last couple of decades really made the difference between having markets that were orderly and liquid and having markets that had to be shut down because of social distancing. So that's sort of the big picture. It's a very important story about how fintech in many ways over the last couple of decades actually saved our markets and worked on behalf of the American people, but people throughout the world. More specifically on sort of innovative type developments, we saw for the first time Ether futures. Something I had sort of postulated was a real possibility, and of course that came to fruition. We've done a number of things where the agency has actually harnessed the power of data, and that is really important because we are not just a proponent of innovation outside, but we also want to innovate as a regulator. We don't want to just sort of do the talk. We want to walk as well. We want to walk that talk, and so. We have developed programs for AI and particularly algorithms to detect spoofing, for example, brought a number of big cases on that regard in our enforcement division. But I just announced last week a major reorganization of the agency, which for the first time creates a division of data, where data coming into the agency can be used by the agency to actually make empirical based decisions on what's best to regulate the market. So those are the sorts of things that we're doing. We're also witnessing new exchanges being formed and facilitating those exchanges that deal directly with digital assets. So we're pretty excited about that. There are a number of people talking to us about how do I become a designated contract market, which in layman's terms is basically an exchange, and how to do that. And so we're very excited. We're working with a number of market participants on becoming CFTC registered exchanges.
Sure. And what sort of advice would you give to these innovators who are approaching the CFTC about launching these new exchanges or new types of businesses that fall under the agency's remit?
Well, LabCFTC, I think, is the first port of call for any innovator that's thinking about how does the CFTC and its regulatory world relate to me? And LabCFTC continues to conduct, started obviously under your tenure, but even now into the present, a number of meetings, every day with innovators about their products, about what their product means, how it could fit into the CFTC regime. And so CFTC in many ways, LabCFTC in many ways, is that initial port of call, that Ellis Island, if you will, where people can come in and then work with LabCFTC, and then LabCFTC can say, well, for your product in particular, it looks like the following regulatory categories could potentially apply. And here is the relevant division and people inside the agency you can speak with. Because just by looking at the somewhat arcane world of the Commodity Exchange Act, which is the statute that governs us, and looking at these various categories, it's often hard for market participants to figure out, well, what should I be thinking about pursuing? Is there a license? I, of course, was a financial regulatory attorney for more than a decade in this space, and it was even difficult for me to guide clients and to say, so what we've tried to do is create LabCFTC as that bridge between innovators and the rest of the agency.
Yeah, well, I really like those images of the bridge, or as Ellis Island. I think in its nascent period, we thought of it as a point guard, but this this is much better. Definitely more elevated, as you say. So you mentioned the Ethereum futures a moment ago. I'd like to shift gears and talk about kind of the world of crypto and digital assets, and maybe as an area to start out. To talk about an area where the CFTC seems to have taken a somewhat different approach from a number of other regulators in the US and around the world that obviously you work closely and collaborate with. And so, the CFTC has had crypto futures or digital asset futures for several years. I'd say largely uneventfully, in the sense of, there don't seem to have been tremendous problems with either the derivatives market or the underlying market. Recently, the FCA in the UK announced that it was banning crypto derivatives for retail customers. And of course, the SEC has steadfastly declined to approve kind of a Bitcoin ETF. And one of the issues cited by both the SEC and by the FCA has to do with kind of the volatility or the unreliability of the underlying spot market. And yet for the CFTC, you've been regulating derivatives based on that same market for quite a few years. How do you sort of think about those issues? And are these just competing worldviews, or are they aligned in some way? How do you look at this?
Well, I think they are not necessarily inconsistent with one another. Part of it is, you're looking at things through a certain lens. And if you're at the SEC and certainly at the FCA, you're thinking first and foremost about investor protection. We obviously look at customer protection, but the derivatives markets, of course, one of the things you mentioned was, well, the spot markets for these assets are quote, volatile. Well, the spot market for wheat, for corn, for commodities, for oil has been volatile for 100 years or more in the United States. And that is the entire reason why our markets were created, to allow people to hedge that volatility, to hedge that risk. And so in many ways, the futures and options, and to some extent swaps, but we're really talking more about futures here, was created to deal in many ways with price discovery and risk hedging for cash markets such as these. Now, that said, that doesn't mean that we are not looking with a very keen eye at the underlying cash markets. And you've seen us bring a number of cases where we are concerned about fraud and manipulation, particularly in the cash markets of these assets, because they could in fact affect the futures market. So that's the first point, is that I think we take a different view of the role that derivatives markets play, as opposed to, let's say, ETFs and traditional investment products, which may not be entirely appropriate under the various securities laws. So that I think is the first point. The second point I would raise is that by the time it gets to the CFTC, and this is what I'm specifically talking about, is our sister agency, the SEC. The SEC has to take that initial threshold view, I think, of, is it a security or not? And so a lot of things that are somewhat concerning, the SEC is sort of the first on the wall in countering those. By the time it is vetted by the SEC and viewed as essentially decentralized enough outside of the various tests of what's a security and as Bitcoin or Ether, once it comes to us, in many ways, it's a very different kind of product, a product that we feel much more confident in. And so I think that's a major distinction as well. By the time it reaches us and we comfortably categorize it as a commodity, it is very decentralized. It often has a very broad base of participants and people using it as a store of value. So that also provides a lot more confidence, I think.
I see. Interesting. So it's you get the opportunity, you get a little time, you get some extra time to assess it, and then you are looking at it from a different lens. There's a few things you said in this topic that I'd like to drill into. Maybe for starters, just given how relevant the digital asset markets have been, in your tenure, did you already know a lot about them when you came to the CFTC, or how do you kind of get up to speed and stay up to speed on these new technologies and new types of markets that are constantly emerging under the CFTC's watch?
Well, I had a little bit of experience with some of the big questions while at Treasury, and I had obviously participated in Financial Stability Board and other working groups regarding digital assets and their classification. But really, I would say the biggest learning curve was when I came to the CFTC, and I really needed to drill down. I needed to know, and I am still learning, just to be very clear, with digital assets, everyone has to be a lifelong student because it is evolving so much so quickly. So I continue to take courses offered by LabCFTC, of course, taking the benefit of all of that cutting edge thinking inside our agency. I also learn a lot from fora like this, talking to people that are in the markets. You are working with innovators. The group that's gathered here today, many of the people in the audience, they have really important things to share. So while I enjoy getting questions from market participants, I also very much enjoy getting nuggets, getting information, hearing what's on their mind, and that helps my learning curve.
That's great to hear. And what you clearly are very kind of passionate about these. What excites you so much about these digital assets? And are there any particular digital asset or digital asset technologies that you find particularly intriguing or promising?
Well, what excites me, I think, at the end of the day, is the opportunities that it potentially creates, particularly the blockchain network itself. So, from the dawn of time, people have been figuring out what could be stores of value and reliable, as well as methods of payment. And by marrying sort of traditional economic theory with the most cutting edge technology, particularly involving cryptography, we've been able to sort of create this potentially new world that could revolutionize and potentially decentralize finance as we know it, providing opportunities to people that are effectively now unbanked and outside the traditional finance system in a good way. Obviously, that also introduces challenges, and those challenges need to be met. But the blockchain network, all of that is fascinating. First of all, because of what we can call the cryptocurrency, if you will, part of it. But now going far beyond that to think about digital contracts and other things, and putting all sorts of things on the blockchain, that to me is really fascinating.
Yeah, that's amazing stuff. And yeah, for a field that really, essentially we just passed the 12th anniversary of the Bitcoin white paper. It's really all just entering its adolescence. It's teen years. Hopefully those teen years will not be too turbulent, but should be interesting for it. And yeah, the learning is critical. And something, this is a bit of a technical thing, but I think it could be helpful for our audience because people often wrestle with understanding this. You spoke a couple of moments ago about, sort of the, what's a commodity versus what's a security when something becomes decentralized. I think people have some familiarity with, the SEC's world and, the Howey test, but, I recently heard you explain how a digital asset can be both a security and a commodity. Can you explain how that can be, how those relate to each other, and then how, kind of a layperson can make sense of that?
Sure, and you know, one of the things is what I've tried to do in my tenure as chairman, and see if I could take very complex topics and sort of get to the far side of simplicity. And so, first of all, the CFTC. What is our jurisdiction? Well, we have jurisdiction over commodity derivatives. So if it's a derivative on a commodity, then we have regulatory jurisdiction, and we also have enforcement authority for fraud and manipulation. If it is a commodity, so not a derivative on a commodity, but just a commodity, there we do not regulate transactions in that commodity, all things being equal. There are some exceptions, but for the most part, we don't regulate transactions in commodities, but we do have enforcement authority for fraud and manipulation in those cash markets. So there's the regulatory side of the CFTC, which also has fraud and manipulation authority. And then more generally, when it comes to commodities, apart from derivatives, we have fraud and manipulation authority only, but we don't regulate it. And again, that's sort of the simplistic big picture. So then the question becomes, well, what's a commodity? And there, the definition of commodity is very, very broad. So basically, there are two things that are effectively accepted from the definition of a commodity. Number one is onions. And that, of course, is based on a historical story. It's kind of amusing, but back in the day, onions cannot be traded. It's still to this day illegal to have a derivative on a commodity. Okay. The other area are movie ticket receipts, film receipts. So if you have to basically say that movie ticket sales are not a commodity, it's pretty much very, very broad. So let me give you a couple of examples. LIBOR and various rates are commodities. Indices are commodities alongside gold, cotton, wheat, etc., as well as all sorts of other financial contracts, including foreign currencies and things. So the definition of a commodity is very broad. All things being equal, if it is not a, let's just say an actual, central bank, currency of some sort, or the US dollar, or some kind of payment system, if it's a financial contract of some sort, it is likely to be a financial product, a commodity, assuming it's not a banking, a traditional bank account or a bank product. But the commodity definition is very broad. So that's just important for everyone to know. But here is the catch. All securities are also commodities because the commodity definition is so broad. But if it is a security, then the SEC has exclusive jurisdiction. So it basically takes it out of the CFTC's jurisdiction and puts it in the SEC's jurisdiction. So taking that all together, that means whenever you have a new digital asset, for practical purposes, the initial threshold question is it a security? And if it's not a security, then it is most likely a commodity. So that is the easiest way to approach this complex intersection of all of these concepts. I hope that's helpful.
It's great. So a security is a subset of a commodity, but if it's deemed to be a security, it's also removed from there. Yeah, I think people can fully wrap their minds around that. And you commented a moment ago that currently the CFTC has kind of enforcement authority with respect to fraud and manipulation, but not direct supervisory authority or regulation of transactions in underlying commodities. In terms of the legislative framework, Ranking Member Conaway recently sponsored a bill in the House that would actually provide the CFTC with jurisdiction for direct supervision of the spot crypto markets. Currently there's no federal regulator who oversees those, although there are certain states where there could be. Do you think that the CFTC is best positioned to do that? Not only in terms of the expertise, but the CFTC has not been asked to directly supervise an underlying commodity market. And if this were to happen, what kind of resources would it take, and what would you see as the benefits?
Yeah, so let's talk about, so obviously this was a question that Congress arguably faced in 1936 when the Commodity Exchange Act occurs. Should the CFTC, should a federal authority have jurisdiction over cash market commodities in interstate commerce, let's say, which is the jurisdictional hook? They ultimately decided no, in part because I think many of these products, wheat, traditional products, even energy products, for example, could be regulated at the local level, at the state level, and it didn't make sense for the CFTC, for example, to be regulating grain elevators and farmers, for example. But now we find ourselves in a situation where we're in the 21st century, and we have these digital assets. And one thought, and I think this drives the very good piece of legislation, a really thoughtful framework that has been set out by Chairman Conaway, is these 21st century assets, if you will, are by definition interstate. They are interstate commerce. Congress has always been concerned in the Constitution about regulating things that really should be left up to the states. But by definition, they are electronic. They're using they're using the internet, et cetera, et cetera. And so I think there is a very sound argument that these types of transactions, the cash markets, could be subject to CFTC jurisdiction. When you look at other federal regulators, I think the question would be, well, who is best poised to look at that? I will leave that up to you and your views, and I'd love to hear them. Who is best positioned, assuming we have the relevant resources, and bring that to bear. But I will say, my concern about the digital asset space is this. I'm not sure I can tell you at this point in time the best way to regulate them, but I can sure tell you the way not to regulate them. And that is through a fragmented system. Having 50 plus jurisdictions have overlapping responsibility over these assets is a sure way to essentially kill them and stymie them in the United States. So I do think there should be some uniform federal solution in time that is thoughtful, that still has a role for the states, for example, in customer protection and custody and things, and maybe other areas that have traditionally been left up to the states in finance. But I do think if this market is going to grow nationally and ultimately internationally, having a single federal regime that people could potentially opt into, leave the choice up to market participants, makes a lot of sense for innovation and growth.
Yeah, that's exciting to hear, and it is absolutely a challenge for entrepreneurs in the space, or for advising. Many GDF members are trying to navigate the system. Also trying to advise them domestically and internationally. And you referred to the U.S. patchwork. It can be very, very challenging, and having kind of a one-stop shop. Could have a lot of benefits.
I don't know if you have any view, Jeff, as to who should be that one-stop shop.
Well, it's interesting. So I do, I think that the CFTC absolutely has the, sophistication to do it. Certain of these digital assets, the ones that fall under the SEC, you could make an argument for them. It's hard to argue that somebody other than the SEC should be regulating things that turn out to be securities. So then you say, well, I guess we're looking at the spot market that's not. Certainly a concern I would have is if the CFTC were given the responsibility, but not the tools and resources it needed, to take on what would be, I think, a very significant new responsibility. And, I think it certainly took time for the CFTC to ramp up with all its new responsibilities with the swaps market. So, that's.
Yeah, I would agree with both points. I think the first point is very clear, and that's that, yes, there's a difference between the CFTC having potential cash market jurisdiction over a certain segment of a commodity market, but not securities. Securities should definitely continue to lie with the SEC. And secondly, the very worst form of regulation is when people think something is being regulated and indeed it's not. So we would need to be in a position, should that legislation pass, to know that we have the requisite resources to do the job if the American people want us to do it.
Yeah, but it's interesting, even, going back kind of in 2016, 2017, when I was doing, some of the outreach for what became LabCFTC, I recall meeting with some kind of crypto swap markets, and they kind of said, well, would the CFTC come in and regulate us? And, then I had to kind of give that kind of jurisdictional thing and said, well, that's not the way it works. It's not, if the CFTC identifies a market that would benefit from its oversight, we can just go in and regulate it. It needs to be statutory authority in Congress and all that. So, but yeah, I think that there are definitely folks out there who would welcome that, but maybe not everyone. So the opt-in regime is also an interesting one. So when you took on your role as CFTC chairman, I mean, you said this incredibly broad-based background from your previous experience in government roles. Was there any advice that you received either from previous chairmen or anybody else when you took on the role that, either at the time or now looking back, you found particularly useful or meaningful?
Yes. So what I did, Jeff, is I really wanted to avoid the ready, fire, aim approach that many people in Washington take, particularly new agency heads. And although I was from the Treasury Department, it was in my mind when I walked in the door of the CFTC that the CFTC was not the Treasury, that it was its own unique agency with its own unique opportunities and challenges and traditions. And so I spent the first 30 days on the job literally having these sessions where I met everyone in the agency in groups of 30 to 40. And I basically said, tell me about the agency. And I made a list of questions, essentially a SWOT analysis, from your vantage point, what are the strengths, the weaknesses, the opportunities for each division director and each office head, and said, before we talk, I would really like you to fill these out and come back to me and we'll have a meeting and we'll walk through them. I did this similar sort of thing with market participants, with key stakeholders, as well as some of the people that had my seat before me. So I could really get a picture of the agency and what was going on. Because again, I didn't want to just sort of come in and say, we're going to do this. And so everything you've seen out of the agency in many ways are not my ideas, but really the ideas of others, both inside the agency and outside the agency, through my own filter in figuring out what should the strategy of the agency be? How do we position this agency? And one of the key things that I learned that I had suspected, but really when I got in the door was made very clear to me, is that the CFTC was at a crossroads, so to speak. It was finishing up the Dodd-Frank stuff, and that certainly needed to do it. But the agency was thinking about, or at least no one had articulated up until that point, what do we do for the next 10 years? What should we be focused on? What is our mission going forward? To some extent, the mission going back was set for us by Congress, by the Dodd-Frank Act, and that was the real focus of the agency. Now, several years ago, people like you and other visionaries, past chairmen, started thinking about, well, what do we start to do? And you have LabCFTC and these sorts of things. And so what I thought made sense was to put all that together, to reinvigorate our mission statement, to come up with a vision statement for the first time in 45 years, a set of core values, and then from there, a 5-year strategic action plan, which was based on, again, not my ideas, but really ideas from all quarters, and me looking at those ideas and saying, which ideas fit within the framework, which don't fit within the framework. And most importantly, one of the big lessons that I got from former chair and others is you can't do everything. And that the essence of strategy, Michael Porter of Harvard Business School often says this, the essence of strategy is determining what you're not going to do. It's making trade-offs. And so by choosing a certain course of action, we're also by definition putting other things to the side. And that's difficult. And a lot of agency heads don't want to do that. But if you're actually going to achieve things, that's what you've got to do.
Well, that's fascinating, and kind of my next question, in just trying to think about what are all the things that you decided not to do, but looking at this past year, I mean, and especially in just a tremendously challenging year, with all the challenges of COVID and the challenges for the agency and for the market and for our country, the CFTC's activity level has just been dizzying. Even just keeping up with it from the outside can be quite exhausting. Just the pace of rulemakings, some long outstanding rules that have been out there for years: capital, cross-border, position limits, swap data reporting, exempt DCO, others. How have you been able, and how have you and the agency been able to kind of accomplish this level of productivity under your leadership in this just incredibly unusual year?
Well, there's an old quote by Seneca the great Roman old senator and Stoic philosopher, that basically, if you don't know where you're going, any port will do. So the first thing we had to do was kind of figure out where we're going. And once we figured out where we're going, then it was just a matter of getting people. And I will tell you this, the agency has been amazing. And you've worked there for quite some time. The men and women at the CFTC really care about what they do, and they want to bring their best to work every day. And they were actually, I think overall, they're a little tired now, but we're very excited about finishing and getting this stuff done, because I think some of these things, quite frankly, we're lying around in some cases for close to a decade. I got an email from someone on the swaps reporting rules and said he had been working on this for 8 years, and there was a stop and go mentality, and finally just deciding to do it. It was a big project, and I think it took most of his summer, but getting it done was a major career feat for him, and that made me proud as chair. So a lot of it is sort of getting the workforce motivated, but also painting that picture of, if we're able to get a lot of these things done and behind us, we can then focus on the exciting future, the next 10 years. And so my chairmanship, I think, has been to bridge that gap between sort of closing out the last decade, and literally we're in 2020 and about to go into 2021, so it makes sense. And then really focusing that agency with the reorg, the new division of data, elevating LabCFTC, all the things we're doing on this next decade.
That's it's been, congratulations on getting so many of those done. And, some of them, I have to say, I worked on, parts of them. We had a kind of a data strategy group that, turned into a data steering group that, worked on, a number of these issues and kind of moved the ball, forward. But, these things, there's just so many components to it. And so, reforming the Part 43 and the Part 45 and the swap data repositories and kind of getting it all together and creating the new data organization is a tremendous step forward. So congratulations.
Yeah, and people had said exactly that. They had said, we've been working on this for several years, but, and I said, well, what's the end game? Let me see if we can help you get there. So that is what we have tried to do.
Sure. So we've had a few questions come in the Q&A, and for all our viewers or listeners, let me say if you have questions for the chairman, please type them into the Q&A, and we'll do our best to get to as many of them as we can. And actually, you referred earlier, at the beginning of our conversation today, to DeFi, decentralized finance, and the decentralized finance industry is extremely nascent. Decentralized exchanges lack mature anti-money laundering policies. You could argue, they have things and lack others. How does the CFTC view decentralized exchanges? Is there a CFTC approach to those, and what should we expect from the CFTC in the DeFi space?
Well, I think the approach is, we're going to take the same approach that we take for centralized exchanges. At least in terms of guaranteeing that there's that requisite level of customer protection, that requisite level of reliability, as well as the requisite level of AML/CTF compliance. But that doesn't mean that those things can't be automated in such a way that the rest of the DeFi system works. It's just going to require additional levels of creativity. And we see that now, even with not sort of DeFi, sort of what I'd call the first generation cryptocurrency exchanges and whatnot. They have figured out ways, some obviously more successful than others, but many successfully, to address AML/CTF concerns and to address some other things, customer protection. And so what I would say to those that are working on decentralized finance systems is, come to LabCFTC, start to talk through it, work through it. And then as they change their model to fit within our system, we will also be thinking about, well, what do we need to change? For example, system safeguard exams and things like that. A lot of those may need to be done far more upfront, and maybe a little bit more, we may need to make tweaks in those as we move forward. But I would say that it's going to be an iterative process. It's decentralized finance isn't going to happen overnight, and it's not ready to go, as the questioner rightly suggests. But I think it's something that I think we're keen to interface with, and to have that iterative discussion as to how do we take this forward. in a way that is just as responsible as centralized finance has been.
Yeah, it's great that the CFTC is open-minded about this, and kind of one of the challenges to regulators posed by decentralized finance is that historically, regulation, particularly financial services regulation, was done on the basis of entities, and you sort of regulated entities that were in your particular lane. And there's been consideration of kind of regulating activities, but if something is decentralized, you may not even have an entity, and you may not even have the responsible, actors and management team. And so it does potentially represent a new paradigm for regulators.
Right, and we have to have confidence. There's a lot more need for confidence up front. Confidence that there's not going to be, something analogous to a 51% attack. Confidence that the systems and the safeguards, as well as the AML/CTF. So there's going to be if DeFi is to go forward, there's going to be a lot more upfront analysis and rigorous vetting, simply because it's not something that we can necessarily, sort of work with over time or evolve, depending on the model. So those are going to be those key challenges. But again, I sort of, that is my challenge for innovators. You know what the rules of the road are. You're smart enough to create things using advanced cryptography and other things. Figure out a way to solve that as well. So you've solved the trust problem. Well, solve it with respect to AML/CTF. Solve it with respect to system safeguards and everything else. Sure.
So if the regulator's door is open for engagement, the innovator, the firm, has got to, there's part of it's their responsibility to start to come up with these solutions, not just have somebody else answer their questions for them. Sure.
Exactly. I mean, the regulator, we are willing to sort of, obviously we can't change if we have legal obligations, but as far as us evolving, us understanding new technologies and thinking about ways in which we can apply our laws and regulations, some of which are 30, 40, and even older than that, to new and developing technologies, you have our word that we are thinking through those, but we also want you to think about not just innovating for products, but also innovating so you can comply with our regulations.
Right. So we have another question about the Bitcoin ETFs, but actually focusing on Bitcoin futures. And the question is, would you say that over the past few years, the CFTC regulated Bitcoin futures market have become of significant size, from zero to close to $1 billion in open interest? I think I actually just saw something within the last week that the CFTC is now regulating the second largest, at least the second largest crypto derivatives market in the world. And there's a firm applied for a futures-based Bitcoin ETF, but when they first applied, the markets were small. Obviously, Bitcoin futures-based ETFs are regulated by the SEC, but do you have a view on what would be a market of significant size in terms of futures, and are Bitcoin futures a market of significant size?
Well, I would say, obviously, compared to where they were a few years ago, they are rising in significance. A lot of it will depend on what the size of the Bitcoin market is overall, the cash markets, and the relationship between the derivatives markets and the cash markets. Right now, the size of the US derivatives markets in terms of notional value is something around 330 trillion. So if you look at 1 billion compared to the 330 trillion, you look at it compared to our energy markets, for example, as well as financial assets, interest rate swaps, it's obviously far smaller than that, but it's growing. And the key to growth, in my view, will be ultimately hedgers coming into that market. Right now, it's speculation, meaning that people are going into the market because they're making effectively bets on the rise or fall of Bitcoin prices. They are not going into the market because they have a series of Bitcoin transactions and they need to hedge the value or lock in some value of Bitcoin, for example. And so I think as the digital asset market continues to mature, continues to grow, and continues to be more mainstream or get into the mainstream, then you're going to start to see the derivatives markets grow side by side. And that is going to be the real key, is using our markets not just to sort of bet on the up or down price of Bitcoin, but to actually hedge real risks that you're facing because your business is making use of it.
Got it. And we have a question. This is another question, I guess, about the regulators. As cryptocurrencies challenge our ideas of what a security is, what a commodity is, even what fungibility is, you know that I think maybe Commissioner Quintens at one point said something can start its life as a security and then become a commodity, or vice versa. Obviously,
I think I said that. But
you said that. I apologize.
Yeah, no, somebody said, I don't want to pin that on him, but that happens to be my view. And if he said it, then I agree with him.
So you know, given the potential, you know, changes and evolutions in the states of these and fungibility, or even changes in what that means, you know, will we see these technologies start to change the boundaries or the silos between the regulators themselves, or the categories of the regulators that exist today?
I think it's going to be a little bit of both. I think that the products themselves are going to change in regard to the regulation, and I think you could see the regulation changing in regard to the products. I will say that both the SEC as well as the CFTC, ultimately, as you mentioned earlier, in so many ways, we are a government of laws, not a government of men or women. We don't go out and decide we're going to regulate something or we're not going to regulate something. Ultimately, Congress decides that, and we promulgate our laws and our rules and regulations in accordance with those. So there may need to be sort of statutory changes, like the statute, for example, that you raised earlier, and others, more specifically defining what's in and what's out. But for now, I think we're grappling because we want to do the right thing. The SEC has a clear investor protection mandate, and it's really important that they see that through. We obviously have really important mandates regarding the integrity, the resilience, and the vibrancy of our markets. And so we are focused on those mandates. So I think it's going to be an iterative process where you're going to see both the products evolve, and you can also see the regulatory landscape evolve. But to some extent, our ability to evolve is cabined by our statutory regime.
Sure. Though, yeah, absolutely. Although to a certain extent, some of that evolution has already started to happen, right? Like it's not that the statutory responsibilities have changed per se, but the degree of kind of collaboration between the agencies and trying to respond to these markets. And I think some of that adaptation, is it fair to say some of that's already started?
Absolutely.
Yeah. Shifting gears to central bank digital currencies. Not to my knowledge, something that the CFTC necessarily directly regulates, but something obviously of interest to a great many of us. I recently saw a report on CoinDesk that you have concerns about whether the U.S. is falling behind. Why do you think it's important? And why do you think we're falling behind? And why is it important for us to be in a leadership position?
Well, I know the Fed, and I think the Boston Fed in particular is working very hard on this. So the U.S., I think, is making progress, but I've also read about other central bank digital currencies that are actually out there in pilot phase. So that does to some extent concern me, because I think the U.S., just as in the private sector, we are a leader in digital assets. I really would like to see the United States government, if it decides to go down the path of a central bank digital currency, which I do think makes some sense, I would like to see the United States lead. And so my overarching view is that I applaud the efforts of the Fed, both the main Fed, the board, but also some of the reserve banks like Boston that are heavily involved with this. And I think we're even getting some assistance from MIT, for example. But I also think that for the United States to lead, we really have to harness the ingenuity and innovation of our private sector. I do not believe government can do it on its own.
Sure, makes sense.
That may be a radical view here in Washington, D.C., but it happens to be my personal view.
Yes, I guess the kind of public-private collaboration, it sounds like it's what you're advocating in that in that area. And is there a role for the CFTC in that, or it's more of kind of a general view for?
Possibly. I think a lot of it has to do with the pipes and our payment systems. And I know that in the United States, while we have very solid payment systems, they're not as fast as perhaps they need to be. And And I do understand that there are other countries that have much more advanced and quicker systems. So the CFTC really doesn't have expertise in that. But what I would say is that if there's anything that we can do to help facilitate effectively a digital dollar, particularly one that is in fact government sponsored, then we stand ready to provide whatever expertise would be needed or appropriate.
Sure, that's great. And speaking of international markets, one of the other accomplishments of your tenure has been negotiations with the European Commission or EU on the status of clearinghouses. Another subject, having kind of gone through a previous iteration of that a few years ago, it seems like after kind of a lot of kind of noise and challenges, where you got to in the end of that actually seems like a very kind of good, solid place and foundation. What are your thoughts about where things have ended up in that sphere, and how did you get there?
Yeah, so first of all, the agreement that you helped negotiate back in February of 2016 still stands. We still have equivalence and recognition. The piece that we didn't address back then, in large part because that was before the Brexit vote and before a very significant change to the European Union, was sort of supervisory cooperation. And so with EMIR 2.2, with some of the concerns about systemic risk and other issues, we were able to work with the European Union to really strengthen our relationship. So I would say our relationship with Europe now is stronger than it's ever been, in part because I think from our standpoint, we recognize that while none of our clearinghouses is systemically important to Europe, they are nonetheless important to Europe. And Europe wants some degree of knowledge and insight into what's going on. And we're happy to work with them constructively from supervisor to supervisor to kind of make that happen. And so providing them information, working with them, and strengthening our relationship, both with the Commission, but also with ESMA, our counterpart, was really a priority. So that's ultimately where we ended up. And we're continuing to work with ESMA on sort of a new framework MOU that we can use going forward. So I think it is as strengthened our relationship with Europe, and that's sort of how we looked at it, as an opportunity to say, well, how can we even get stronger and have a better relationship with Europe as a result of this, as a result of Brexit. And we've done the same thing with the UK. So you just saw we signed an MOU with the Bank of England, and so we approached both entities post-Brexit as, how can the US grow closer to each of you, address any concerns you may have, but ultimately work with you to make a stronger, sounder cross-border regulatory framework. So that's what we've done, and we're looking forward to the next few years.
That's a wonderful note to wrap up on. And actually, speaking of kind of international matters and our relationship with our special relationship across the pond, the next series in the Global Leaders on just November 17th, Global Blockchain Business Council. We'll talk with Ed Balsey, a member of the House of Lords and member of the Communications and Digital Committee, the UK. So please tune in for that. So in conclusion, Chairman Tarbert, thank you very much for joining us today. We're very grateful for your time and your busy schedule and all the many insights, and congratulations on a tremendously successful year, and thanks again.
Thank you so much for having me, Jeff. It's great to be here at GDF. All the best to all of you and your members.